It started with a single headline that no one could ignore. $5 trillion vanished overnight. Not millions, not billions, but 5 trillion gone, wiped off the global financial system as if it had never existed. Traders froze, central banks scrambled, and the world's richest investors stared at screens in disbelief. This wasn't a glitch, a misprint, or a small bank failure. This was a seismic shock, shaking the foundations of the global banking system. And right now, we're standing on the edge, watching a story unfold that could change everything. Welcome to Macro Rewind, where we break down the crisis before it breaks you. But before we dive deeper, hit that like button and subscribe so you never miss the latest updates on the financial storms shaping our world. What does it even mean for $5 trillion to disappear overnight? To put it in perspective, that's more than the GDP of Germany, Japan, and the United Kingdom combined, evaporating in hours. Banks that were considered untouchable, institutions that were too big to fail, suddenly felt anything but safe. People are asking, is this just the tip of the iceberg, or is the entire system teetering on collapse? The truth is, no one is quite sure. What we do know is that the signals have been there for months: hidden cracks in lending, unsustainable risk, and shadow banking practices that few dared to scrutinize. Late last night, reports started coming in from major financial hubs. New York, London, Tokyo, they were all buzzing with the same urgent question. How did this happen? Overnight, interbank lending froze, stock futures plunged, and trillions in derivatives vanished from balance sheets like ghost money. And the worst part? Regulators and government officials were caught flat-footed. The warning signs had been subtle, buried in complex financial reports that only a handful of experts could interpret. But now, in plain daylight, the world could see just how fragile the banking infrastructure had become. Most people have no idea how quickly panic can spread in modern finance. It's not just about money disappearing. It's about confidence evaporating. When depositors start doubting whether their banks are safe, the system begins to unravel. Lines at ATMs form in minutes, digital banking apps crash under the strain, and suddenly the illusion of stability disappears. And with $5 trillion gone, that illusion was shattered. Macro Rewind has tracked similar patterns in previous crises, and the speed at which this one unfolded is unprecedented. The first dominoes fell in what experts call the shadow banking sector, this hidden network of financial entities operating outside traditional regulation, had accumulated massive risk positions. When the market shifted, these positions became toxic, and losses cascaded like a wildfire. But here's the kicker. These losses weren't isolated. Your major international banks were interconnected through a web of derivatives, credit swaps, and complex loans. When one fell, others couldn't absorb the shock. Within hours, billions were wiped off global markets, and $5 trillion of paper wealth simply disappeared. Meanwhile, central banks tried to intervene. Emergency liquidity injections, overnight lending, and press statements intended to calm nerves barely made a dent. Traders didn't buy it. Investors panicked. Social media exploded with rumors and unverified reports of bank collapses, fueling a cycle of fear. In a digital age, panic spreads faster than cash ever could. Every headline became a trigger, every tweet a potential spark for the next market meltdown. The financial world, as it had been known, felt like it was standing on a precipice. Many are asking if this could have been prevented. Could governments have stopped the $5 trillion wipeout? The short answer is complicated. Banks and regulators were aware of growing vulnerabilities, but systemic risk is tricky. When institutions are so deeply intertwined, one misstep can trigger a chain reaction no one can control. Think of it like a row of dominoes in a skyscraper. Once the first few fall, the rest follow at terrifying speed. And unlike previous crises, this one isn't confined to a single country. It's global. Every major economy, from Wall Street to Shanghai, is entangled in the fallout. In the past, financial meltdowns were often confined to one sectorial estate, tech stocks, or a single bank, but this time, the collapse is everywhere. Money markets, investment banks, even insurance firms are feeling the tremors. Pension funds and retirement accounts are suddenly at risk, and ordinary people are waking up to the reality that wealth isn't guaranteed. A single day wiped out lifetimes of accumulated savings on paper, and that is before we even consider the knock-on effects on loans, mortgages, and consumer credit. Analysts are scrambling to understand the scale of the disaster. Some predict that governments will have no choice but to nationalize certain banks, temporarily taking control to stabilize the system. It is warned that bailouts could be impossible, given the sheer magnitude of the losses. $5 trillion isn't just a number, it's a systemic shock capable of forcing structural change in the global economy. For some, this is the wake-up call they've been waiting for. For others, it's the beginning of a nightmare they never imagined. So what should people do right now? Panic rarely helps, but awareness is crucial. Diversification, understanding, exposure, and keeping some assets liquid are more important than ever. And while mainstream media often downplays the risk to avoid public hysteria, Macro Rewind is committed to showing the reality on the ground. People need to grasp that financial systems are human-made and inherently fragile. When confidence falters, even institutions deemed invincible can crumble in hours. Questions keep piling up. Will governments act swiftly enough to prevent further collapse? Could this trigger a wave of bank runs unseen in modern history? Are we entering a period of global financial restructuring, where old institutions fail and new ones emerge? No one has all the answers, but the signs suggest the world is entering uncharted territory. What happens next could redefine the way money, credit, and trust operate on a planetary scale. History has shown that crises like this are not just about economics, they're about human behavior. Fear drives decisions faster than rational analysis. When banks fail, markets panic, and society reacts. $5 trillion vanishing overnight is more than a financial event, it's a psychological shock. One that could influence policy, regulations, and market behavior for decades. And right now, every move matters. Every decision by banks, investors, and governments could shape whether this collapse is temporary or the beginning of a systemic breakdown. While some argue that the system will stabilize, others warn that the fragility revealed by this event is a ticking time bomb. Credit markets are frozen, trust in large financial institutions is eroding, and interconnected debt structures are showing cracks that could widen in the coming weeks. For the first time in decades, it feels like the global economy is vulnerable in a way many thought impossible. And the reality is, no one knows how far this domino effect will go. We're already seeing ripple effects in commodity markets, currencies, and international trade. Stocks fluctuate wildly, crypto markets surge and crash, and even everyday banking services face interruptions. People are waking up to a world where $5 trillion can disappear overnight, and the implications touch everyone, not just the wealthy or institutional investors. From small business owners to retirees, the question becomes, is my money really safe? And what does the future hold for global finance? In this chaos, information is power. Following reliable sources, understanding risk exposure, and paying attention to policy moves are critical. Macro Rewind will continue to track every development in this unfolding story. But one thing is clear, the disappearance of $5 trillion isn't just a headline, it's a warning. The global banking system, once assumed invulnerable, has shown cracks, and the coming weeks may reveal just how deep they run. Now, we want to hear from you. What do you think will happen next? Will governments stabilize the system? Or are we heading for a major financial restructuring? Drop your thoughts in the comments below, and share this video with anyone who needs to understand the reality of what's unfolding. Knowledge and discussion are our best defenses in times like this. As we watch the world grapple with this unprecedented loss, remember that financial stability is never guaranteed. $5 trillion gone overnight is a wake-up call, not just for investors, but for everyone who relies on the banking system. The questions it raises about risk, trust, and the fragility of our global economy are urgent, and the answers may define the next decade. Stay vigilant, stay informed, and never underestimate the power of the system you think you understand. The world of finance is always more fragile than it seems.